I'm Caroline Hyde in London. Emily Chang is off today. This is Bloomberg Technology. Coming up, Silicon Valley drives the losses on Wall Street. That's as the Nasdaq falls the most in 6 weeks. We're taking stock of today's tech-driven sell-off. And Facebook is leading the tech rout, roiled by reports of its data misuse. We'll bring you all the latest in this quickly developing story. Plus, Uber halts its autonomous car tests after a pedestrian in Arizona is killed. Where Uber goes from here. First, to our lead. Facebook turning in its worst performance since 2014. More than $34 billion are wiped out from Facebook's market cap in just the one session. This after the social networking giant faces new pressure from the US and European officials, demanding answers to reports that a political advertising firm retained information of up to 50 million users without their consent. Now, the sell-off in Facebook sparked pressure on most of the tech stocks today. Let's get straight out to Bloomberg News stocks reporter Abigail Doolittle with more. And, well, in one day, there goes 1 month's rally for Facebook.
It's pretty amazing, Caroline. Backing up, though, for a moment to the major averages, it was a pretty extraordinary day, considering that we opened lower, but mid-morning, we were really sharply lower, much of this having to do with Facebook, but it sort of felt like it came out of nowhere. The morning starting off to a somewhat slow trading session, and then mid-morning, midday, really those losses accelerating at the lows. The Nasdaq 100 down more than 3%. The worst day on the close, down, I believe, 2.7% since February 8th. And if you recall, that was during that other period of big volatility that seemed to come out of nowhere. Now, relative to today's sell-off, Facebook certainly seemed to be one of the triggers on that story that you were talking about, the data breach of user data by Cambridge Analytica that was perhaps kept. Cambridge Analytica denying this, and Facebook is going to be executing a forensic search into the company. But it really set off a risk-off tone for some of the other big tech names, because Facebook, which did have its worst day since March of 2014, at the lows down more than 8%, having its worst day, in fact, since 2012, finishing off of those lows. But nonetheless, a risk-off tone. Lots of the big names lower: Apple, Microsoft, Alphabet, and Cisco, among many, many others. Investors fleeing to some degree these high-tech names that have done very well, high quality. But there could be some more pain to come, Caroline. If we hop into the Bloomberg and take a look at the technicals on Facebook and take a look at #BTV 1506, this is a one-year chart of Facebook. We see a nice uptrend. That tells us the buyers have been mainly in control. But then on this year's volatility, we have this tightening coil. And on the action today, check that out. A gap lower, lots of black space between Friday's close and today's open. That tells us that the buyers were blindsided. Sellers really stepping in. Below at one point, the 200-day moving average finishing just above it. All of this, though, Caroline, suggests that we could see some more bearish action for Facebook. It has a pretty decent weighting to the Nasdaq, pretty decent weighting to the S&P 500. That may suggest that some more bearish action could be ahead for not just technology, but the major averages. Some of this contagion fear around Facebook certainly bleeding, I should say, into stocks overall.
Interesting. If you look at analyst recommendations on Facebook, though, only 2 say sell. Many say this is a buying opportunity. Will we see the contagion continue, do you think?
You know, that's a great question, and time will tell. But a lot of experts are saying that this is early innings in terms of what's going to come next. Investors hate uncertainty. So if there's any risk of a real issue here, of any sort of real fault on the part of Facebook, you could really see this stock sell off. And those technicals, if the stock does go below its low back in February of $167, and right now it suggests that it could. Again, those sellers really stepping in. It points to a decline below $140. So that would certainly suggest that the selling, the bleed will continue in Facebook. If that happens, I would have to think that the contagion would move into tech overall. But time will tell, Caroline.
You've been covering this throughout the day for us, Abigail Doolittle. Brilliant as ever. Thank you very much indeed. Now, let's continue our discussion on Facebook. For more, let's bring in Bloomberg Technology's Sarah Fry. She's been across it all day. And in New York, Bloomberg contributing editor, it's David Kirkpatrick, CEO and founder of Techonomy and friend of this show.
Good to be here.
And, of course, the author of The Facebook Effect. We'll dig in first to Sarah, though, because, Sarah, talk to us about really the timeline here, because the data misuse, it was known that Cambridge Analytica had this data by Facebook back in 2015, but they thought they got rid of it.
Right. So Facebook put out this report on, or this blog post, I should say, on Friday, saying that it received new information that may lead them to believe that Cambridge Analytica did not delete this data. What they were actually referring to there is the news reports that were set to come out the next day. So it was kind of confusing. The next day, we get these bombshell reports from the New York Times and the Guardian Observer that explain that this data is still in the hands of Cambridge Analytica and this researcher, and that was all cited to this whistleblower, Christopher Wiley. So it all unraveled from there, and then today Facebook came out and said, well, we don't actually know if Cambridge Analytica still has the data. We have to do an audit. So Cambridge Analytica agreed to an audit, let a digital forensic specialist come in to their servers and look at whether they actually deleted this data. So this is all unraveling as lawmakers in the U.S. and in Britain call for Mark Zuckerberg, Sheryl Sandberg, somebody from Facebook to come out and take responsibility and explain what happened here.
Totally fascinating in terms of the company reaction here. David, talk to us about how you feel that Mark Zuckerberg, Sheryl Sandberg, and Facebook in and of itself is responding at the moment, because they have just been bombarded really with the realization of quite how powerful they've become.
Well, you know, so often it's the cover-up, not the crime. It's not even clear, as Sarah was explaining, that there really is a crime on Facebook's part here. They may not have actually done anything wrong. Certainly, technically, they may not have, although it could be that it may end up be the case that they should have disclosed to many of the users some time ago that a commercial organization had acquired their personal data, which was supposedly for academic use. These are very complicated questions. But one thing that's not complicated is that in this dispute and in so many other recent controversies surrounding Facebook, we have not heard the voice of Mark Zuckerberg at all, and barely that of Sheryl Sandberg. My own opinion is that that is a strategic error on their part of the highest proportions, that they seriously underestimate the degree to which people are upset about this stuff, and they're basically hiding with their heads in the sand.
I mean, talking about voices, you're saying we're not hearing from some of the Facebook leadership. We are hearing from Cambridge Analytica's CEO at the moment. I can bring you a quote. We're just getting a recent quote from the CEO saying, "I must emphatically state that the Cambridge Analytica does not condone or engage in entrapment, bribes, or so-called honey traps, and nor does it use untrue material for any purpose." Sarah, there you're hearing Cambridge Analytica speaking out. Do you expect Mark Zuckerberg to be called up in front of US government lawmakers, in front of European lawmakers? Will he take to the stand, do you think?
Well, let's just, for a second, I want to clarify that that quote from Cambridge Analytica is actually in relation to a Channel 4 News undercover operation where they went and spent time with Cambridge Analytica and reported out that they use those methods. In terms of whether we're going to see Zuckerberg testify in front of lawmakers, I mean, certainly if they ask, he may have to. Zuckerberg's strategy seems to have really shifted over the last few months. In the beginning of last year, as you recall, he was being very emphatic about wanting to be open, about wanting to take on user questions, about traveling to different parts of the country and trying to understand their Facebook concerns. Now we've seen him very much to himself. Same with Sandberg. They have not really come out and talked about this issue in the public eye. And for this particular recent issue, I think that one of the reasons may be that Facebook hasn't confirmed on its own whether these reports are true based on its own data. And the report that they put out, or I should say the blog post they put out on Friday, sort of lent weight to these news reports that then later they had to say they weren't sure were true. So the company is really bungling the response to this right now. And I think they will have to take on a higher level response once they get the facts clear on their end.
I mean, we have seen an emphatic voice being made by the market, and is that of the sell-off that we've seen in Facebook. And I just wanted to dig into the Bloomberg terminal now. If you've got one, type in #BTV, then you can type in 811. There you see it, how much we saw Facebook fall off there in the blue. You saw Facebook share price really down about 6.8%, but it's also dragging the rest of the so-called FANGs. You know them. We've not only got Facebook, you've also got Amazon, you've got Netflix, and you've got Google, which is, of course, owned by Alphabet, all being dragged lower on the day of this. And And therefore, David, do you think the size and the influence of Facebook is now being realized in and of itself by the company? Will this be a turning point, do you think? You've written the book on them.
Well, you know, it's the way you asked the question is exactly right. Does the company realize its own size and influence? I think one of the problems Facebook has had, even to this day, is that they still internalize themselves as a scrappy startup. And they sort of think, oh, we're still struggling for success, blah, blah, blah. They don't realize that they are now bigger than most governments in their influence in the world, that they are completely unregulated, that they're completely untransparent, that the world is seriously worried about how their systems work and just does not have the information to assess how problematic they are. And that's for Facebook to remedy. They are only starting to realize that. And I think the fact that they do hide behind, you know, Facebook pages and an occasional tweet is indicative that they don't really want to engage with the questions that are being asked very seriously right here by us and on every other media right now.
And they have been working with regulators before this. We'll see how they continue to do so. Thank you so much. Of course, it's David Kirkpatrick, CEO of Techonomy in New York, and Sarah Fryer, live for us in San Francisco. Now, a stock we're watching, other than Facebook, it's got to be Oracle, reporting its third quarter earnings with revenue in line with analyst estimates, though sales of new software licenses declined. This as the company transitions to cloud-based computing products. The world's second largest software company has spent recent years trying to transform itself from a traditional information technology vendor into a cloud contender. Oracle has bet its future on a new version of its database software that automates more functions and a growing suite of cloud-based applications. But, well, it's faced stiff competition from cloud vendors, including Amazon, Microsoft, and Salesforce. Now, Oracle's Safra Catz is speaking on the call now, saying that operating margins will continue to expand. We'll continue to bring you all the headlines. Now, coming up, a self-driving Uber kills a pedestrian. The company has since suspended its autonomous testing, but what now? We discuss. This is Bloomberg. Now, a story we continue to watch. A self-driving car from Uber has killed a pedestrian in what may be the first death due to an autonomous vehicle. A woman was crossing the road in Tempe, Arizona, Sunday evening. That's when the car in autonomous mode struck her. She died from her injuries at the hospital. Now, Uber has since suspended all its driverless car testing in Pittsburgh, in San Francisco, in Toronto, and the greater Phoenix area. For more, let's bring in Bloomberg technology reporter Mark Bergen in San Francisco. Mark, any clarity on exactly what happened and Uber's swift reaction?
Not much yet. Unfortunately, we don't have the police report yet. We know that the tragedy occurred last night around 10 p.m. There's a woman who was not in the crosswalk. She was walking out. The car was in autonomous mode. We don't know if the car sort of identified the pedestrian and didn't stop in time, or the car didn't identify the pedestrian. There was an issue, or if they identified it and couldn't move out of the way. So there's a lot of unknowns. I think at this point, companies like Uber and Waymo and GM are probably waiting to see what regulators and the public, how they respond.
Yeah, and of course, you cover Alphabet significantly, therefore looked highly at Waymo. Do you think GM and Waymo will have to take similar steps in reaction to what happened to an Uber car?
It's unclear. From what I've been told, the city of Chandler, where Waymo is testing right now, so they're not changing any policies, they're not restricting Waymo. Waymo has been the only company that's been testing without a safety driver in the front seat. So in Uber's case, as far as we know, there was a safety driver in the vehicle last night. All the Uber test vehicles have someone that sits behind the wheel just to take over if they need to go to manual mode. So Waymo's been the most aggressive. It's not clear. They haven't said anything today if they've changed their plans. At this point, they've announced that they're going to roll out a commercial service to the public at some point this year.
What about consumer confidence? How much does this get knocked back? Because this is what many advocacy groups are going to be now highlighting, concerns about the so-called safety of these vehicles. But actually, in the longer term, it's hoped that this sort of technology can drive safety.
Right, that's what every company that's working on this and every engineer that's building these firmly believes, that these are the safer alternative to human driving. Yet at the same time, the consumers don't have a lot of knowledge about self-driving cars. They don't know how they work necessarily. There's still the issue of public trust. We don't have a great sense of cybersecurity concerns, safety concerns are paramount. There was an incident 2 years ago with a death, unfortunately, with Tesla autopilot software. It doesn't seem like that's really set the industry back in a meaningful way. So it's unclear to see how this will change things.
We'll cover it closely with your help. Thank you very much indeed, Bloomberg's Mark Bergen there. Now coming up, IBM made AI a reality with its Deep Blue chess champion and Jeopardy-winning Watson. So what's the company predicting for the next 5 years in tech? We find out next. This is Bloomberg. IBM is getting ready to make its big predictions for the next 5 years in tech. From advances to cloud computing to tiny AI-fueled microscopes monitoring the pollution in our oceans and the ever-expanding cloud ecosystem. It's all going down in Las Vegas in the IBM Think Conference. But let's welcome Arvind Krishnu. He is IBM Senior VP for Hybrid Cloud and Director of IBM Research, who is standing by in Las Vegas. Welcome to the show, sir. Thank you very much indeed for joining us. And I've got to look at your 5 technology focuses and trends for the next 5 years. You're talking about cryptographic methods to be able to stop counterfeiting. You're talking about quantum computing. You're talking about blockchain. Can this add to IBM's bottom line in the next 5 years?
Hi, Caroline. Good to talk with you again. And the answer is absolutely yes. On blockchain, when we look at solutions being built, whether for helping global shipping or for food safety, these are all solutions which are absolutely going to add to both the top line and then the bottom line. When we think about quantum computing, I'm predicting it'll be mainstream within 5 years, and mainstream implies it'll be a commercial entity. And when we think about AI, I think AI is already a business for us, and it'll only keep expanding as we go down. And so all of these predictions are part of our strategy. Yes, they solve certain big societal challenges, but the technologies that underlie them are already contributing, and in the case of quantum, will contribute to our bottom line.
I mean, you're world renowned for the Watson, of course, the AI platform. Will the AI platform Watson be able to work across cloud computing providers, or does it have to be with IBM?
So Watson has a few farms. So when we talk about accessing the Watson service, the actual what we call APIs, etc., work on our public cloud. But you can absolutely have applications from other clouds. Salesforce, Workday are great examples of companies who have their own clouds that use their data to call out to a Watson service and give the answer back in their application. When we have many banking customers, they use it on-premise, not just in the cloud. So you begin to see that there is a multi-cloud journey that comes up, and Watson plays a role in that multi-cloud journey.
Multi-cloud is an interesting one, particularly with partnerships being struck in this rather competitive area. In particular, I'm thinking of AWS working with VMware. They've got a partnership there in hybrid cloud. Is this something you're having to respond to? Are you looking for partnerships of your own?
Well, so we have many partnerships of our own. I'd almost laugh, Caroline, and say maybe AWS responded to us on VMware. So VMware and IBM have been on a cloud journey together for some years now. We have 1,400 clients plus from VMware who work on our public cloud, in addition to which we have thousands more who are on our private cloud. I think it becomes an aspect of what we'll call hybrid cloud. Many enterprise clients, governments, healthcare, telcos, banking are going to have stuff on premise. They're going to run private cloud, they're going to run public cloud, and they're going to run multiple public clouds, and that aggregate environment has to work together. So I think you'll find us striking partnerships, and you'll find others also, because it becomes a world of co-opetition.
Co-opetition, and the players are big and they're hefty. Yes. When you look at that co-opetition. I'm looking at AWS is vast, you've got Microsoft's Azure as well. These are big players in comparison to yourself. How do you really try to win over a startup, for example, who is looking at the multitude of offerings? What makes you different?
Well, it's always going to be different based on how much regulation is in the industry, based on sensitive data, and what your cloud is good for. If I look at a startup that wants to do work on blockchain, if you want to look at a startup doing work on IoT, you look at a startup that's wanting to make sure that the data is always encrypted. If you begin to look at those aspects, then I'd say that we come out way ahead compared to anybody else. And then at the end of the day, engineering also matters. The quality of our services, the resilience, the overall security and disaster recovery, as well as data residency, which comes about due to regulation. So our 60-odd cloud centers give you a lot more flexibility in terms of which geography the data is resident in. All of these will go play a role in how we go win in cloud.
We'll see how that competition, cooperation continues. Arvind Krishnu, wonderful to speak to you again. A year on, IBM Senior VP for Hybrid Cloud. Thank you for joining us from Las Vegas. Now coming up, fintech startup Affirm is trying to corner the millennial market, launching a new kind of credit card without the plastic. We'll hear from Affirm CEO Max Levchin next. And let's dig into the Bloomberg terminal now, because we've got coverage of our big story, Facebook. And if you type in #BTV1535, you can see what I'm seeing right now. We've got technical indicators saying the sell-off could continue. We're currently seeing Facebook trading below its 200 daily moving average. This is Bloomberg.
I'm Mark Crumpton. You're watching Bloomberg Technology. Here's a check of First Word News. Authorities in Austin are urging residents to be vigilant after the fourth bombing by a potential serial bomber in the Texas capital this month.
We want to talk to him because we don't quite understand what's the message he's trying to send. Why is he doing this? We've sent out phone numbers. It's unfortunate there was another bombing after our press conference yesterday where we asked him to contact us, because we have people here to talk to him.
Sunday night's blast set off by a tripwire wounded two people were killed in the three previous bombings. The British Prime Minister Theresa May says Russia had the capability, motive, and intent to carry out the military-grade nerve gas agent poisoning of a former Russian double agent and his daughter. May today doubled down on accusations that the attack mirrors a pattern of behavior by Russia. The Syrian government released a video today showing President Bashar al-Assad visiting troops on the front line of the newly captured areas of Ghouta near the capital of Damascus. He told them, quote, "Today you are conducting the battle of the world." Students returned to classes at Florida International University today following last week's bridge collapse that killed 6 people. Attorneys announced the filing of a lawsuit. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. It's just after 5:30 p.m. here in New York, 8:30 Tuesday morning in Sydney. My colleague Paul Allen's here with a look at the markets. Paul, good morning.
Good morning, Mark. Yes, trading already underway in New Zealand this Tuesday, and as you might expect, the NZX already off to the tune of about 1/3 of 1%. And this is, of course, after we saw all the major indexes in the US finish weaker, particularly the NASDAQ slipping 2%. Facebook there posting its steepest fall since 2015 and is now trading below its 200-day moving average. If we take a look at futures here in Australia as to how we're set up for the coming day, well, we're weaker by about 0.6 of 1%. Nikkei futures traded out of Chicago weaker by about 1.3%. We're also seeing some more weakness in the Aussie dollar, more greenback strength story than anything else as we wait on minutes of the Reserve Bank of Australia's March meeting. The yen also little change there against the greenback. Quick look at commodities. We've got gold recovering, a one bright spot today, but oil is down for the first time in 4 sessions, and iron ore continues to weaken on those record stockpiles we're seeing piling up at Chinese ports. Elsewhere, G20 finance ministers meeting gets underway in Buenos Aires today. Watch out for some tough talk on trade. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Caroline Hyde. And let's return to our top story. Facebook shares plunging in the worst performance in 4 years. This after it was reported that a political data firm got a hold of the private information of millions of Facebook profiles ahead of the US presidential election. Our next guest says this sell-off is, though, a big buying opportunity for investors. Ivan Feinseth, he's the analyst at Tigress Financial, joins us now from New York. Ivan, why the buy?
Well, I think their business model is still intact. They're going to have issues like this with data and with the things that people post. But when the stock sells off, I've said many times it's a buying opportunity. First, this specific problem seems to be the problem of Cambridge Analytica and not specifically a Facebook problem. It wasn't a data breach. It was a misuse of data by a vendor. So I think Facebook may have recourse to that vendor.
Interesting. I mean, it seems that many of the analysts out there agree with you. If you dive into the Facebook page on Bloomberg and type in ANR, analyst recommendations, I see that nearly everyone is a buy. We've only got 2 sells out there. That's the just small block in the red. Sure, the price is going down in the yellow line, but you're seeing the price target remaining lofty. I want to get your take if, therefore, in these price targets, is regulatory reaction and potentially more oversight baked into those price targets, do you think?
Well, we don't use price targets at Tigris, but I believe the stock is cheap, and there's many things that Facebook can continue to do and is doing to further monetize basically their user base. I mean, Facebook's business is selling advertising to their user base to find what their user base is interested and likes and provide targeted ads and things of interest to them to further engage them. So, you know, the one thing about Facebook, you know, if you don't know what the product is, then the product is you. Facebook offers their user base to advertisers and helps their advertisers to better target people that would be most interested in buying their products. And there's a huge migration of advertisers that are going away from a traditional media, which is broadcast to a broad audience, and using tools like Facebook and Facebook's analytic tools to better target customers that would be most interested in their products.
Yeah, but Ivan, we've seen a bit of a backlash with regards to Instagram, for example, many feeling that they didn't like the algorithm, they didn't like the way in which adverts were targeting them. We've seen other startup social media companies do rather well out of that. Do you think that we could see any slowdown in user growth? Would that hit the business model? Would that hit, therefore, your view on whether this was a buy?
Well, the growth will slow down over time because they have a huge penetration into the population. They do have over 2 billion users on Facebook overall. And Facebook will continue to figure out how to better engage those users. I mean, at some point, Facebook could have a tiered service offering that offers a free service to the basic users and then offers a more deluxe service with more features that they start to charge for. Also, in the click-throughs to the ads, there could even be an opportunity for Facebook users to pay for their subscription with click-throughs. So there's many things that they could do. And one of the things that Facebook is doing is using artificial intelligence to better find the more likely customers for specific products and better tailor things that you may be interested in, because people do like to see things that they are interested in.
Ivan Feinsworth, great to have you here, analyst at Tigris Financial, talking us through why maybe now is the buying opportunity with Facebook. And of course, we're going to move on to our next guest, who we have to get a take on this latest news surrounding Facebook. I'm talking about Affirm CEO Max Levchin. You know him, the co-founder of PayPal and is Yelp chairman. He's helped build many a business, is also on the board of Yahoo. Max, thank you so much for joining us. And you're an advisor to companies. You put the transparency at the very heart of your ethos of the company you're currently going to talk to us about, Affirm. How do we therefore see companies such as Facebook also have to look at transparency and at the privacy of people's data?
Well, I think that's exactly the core lesson to be learned here. Fundamentally, privacy, information disclosure, or lack thereof, is a deeply personal issue. And the thing that differentiates a good experience from a bad one is when the company is very clear to its users what their data may or may not be used for. When you're borrowing money, as the case is with Affirm, we're asking for some fairly personal pieces of information. Your income sometimes and your bank account data could be used to give you a better price and credit. Fundamentally, though, our goal is to protect that data and to make it very clear what the data that we collected from the user will be used for and whom could possibly be shared with. I think as we move forward, every company will be held to an increasingly higher standard, and these lessons are going to come in, and some of them will be painful.
I was looking at your Twitter profile and there's some recent tweets you put out on March the 1st. It was all regarding a study put out for 2018 showing that, well, trust in the US has fallen away. And in particular, it's interesting that you noted then that technology companies, the tech industry, is the most trusted out there, whereas financial services are the least. Do you think the tech industry might become less trusted? Could it lose that halo?
Well, I think the rumors of the demise of trust in technology companies have been greatly exaggerated, at least according to the study that I was quoting. But my take is that the responsibility is what matters. You know, we can rely on ex post facto observations that we get from polls and surveys, or we can try to lead the way and actually do the right thing. So I'm very focused on making sure that our firm remains a trusted, highly regarded, transparent, honest company. And I hope other companies, other CEOs take these lessons to heart and try to push the envelope forward as opposed to hide behind statistics.
Let's talk about pushing forward on your particular company, Affirm, at the moment. You've made an announcement today. We've got the new Affirm in the store. You're going into bricks and mortar. How are you going to be tackling rivals such as the actual credit card? Because you've got to be a credit card without the plastic, but also you've got to be up against other loan providers such as the likes of Lending Club.
Well, Affirm product in store and online as well is very specific. We lend money to create an honest, transparent loan specific to the purchase. Many companies, like the ones you mentioned, are fundamentally about personal loans, maybe refinancing your debts. Those are all viable ways of using credit, but what we're really focused on is making sure that you don't get yourself into trouble, or at least understand very clearly what you will pay, what something will cost you if you choose to use Affirm to finance it. One thing that's really important, I think, in retail, it's changing. The rumors of retail's overall death have been greatly exaggerated. It's not all getting eaten up by Amazon, nor is it all going from offline to online. But it is changing in a very big way. What used to be a distinctly separate set of experiences, you either shop online and you get it shipped, or you shop offline and you pick it up, have been blending very rapidly. And the company began as a way of offering credit to folks shopping online, letting them take something that they would have a hard time affording with cash and splitting it up into a clear set of 3, 6, 12, et cetera payments. Over time, we've become very clear that people would research an object online and then would go to a physical retail location and buy there, or the other way around. They would start offline, maybe consider buying it, go home, change their mind, change it again. And so we've gotten a very clear message from our retail partners. We have to be in both places. We have to be everywhere their customers are if we are to be good partners to retail. And so this product today really answers the question, are we where the customer wants to buy? And I believe we've just answered it with yes, we are.
Talking about being everywhere, I mean, you mentioned how Amazon is perhaps eating at the heels of retailers. Well, it looks as though financial services could be Amazoned as well. Is this a competitor that you're keeping an eye on?
I spend most of my time very focused on my own little fledgling company. I think Amazon is a great company and they have a lot of fish to fry. We're a tiny little company, but we're growing very quickly and we have many tasks we're trying to accomplish. So I spend almost all of it thinking, what can we do for our customers? How can we be better partners for our merchants?
Interesting. So what about being better for some of your investor base? It's interesting that Peter Thiel, of course, backs your company, and he said that he doesn't like San Francisco. Would you ever think of moving from San Francisco?
You know, my company's in San Francisco, my employees, my friends are in San Francisco. I'm pretty well established here. I have my gripes with the city and its management, and I try to contribute what I can when time allows by trying to solve some of the local problems, which are certainly non-zero. We have one of the worst homelessness problems that I'm deeply concerned by and engaged with. But now I'm at the moment, I'm planning to stay in San Francisco. It is really difficult to hire here, I have to say, though.
The competition is fierce. What about, we talked about how some of the tech companies might be looking at getting into financial services. What about the older guard of financial services, such as American Express, getting into offering these sorts of loans that perhaps you've been cutting your teeth with and showing how to do it in the startup world? Are they coming in on your space? Do you think the older ones can reinvent themselves?
That's actually a great question. So one of the biggest differentiating factors between us and what you call the old guard we really built the company and all of our products around this notion of being completely aligned with our customers. We don't make money on our customers being late. We don't make money on our customers forgetting to pay. We don't make money on our customers not noticing a fee here and there. It's all completely transparent and honest. And a lot of the traditional financial services companies' business models are fundamentally built on this idea of what you don't notice, we can pocket. And I think it's really, really difficult for a lot of the incumbents to say, you know what, we're going to take what amounts to half of our profit line and voluntarily give that up just because there's this new wave of thinking of transparency and honesty. It's just too hard, especially for publicly traded companies, especially for really large, very profitable companies, saying, you know what, it's okay, we don't have to make money on hidden fees. It's a very, very difficult step to take. So I'm not overly concerned by the traditional financial institutions deciding that they're going to fundamentally realign themselves with their customers. It's just not been the case for a very long time now.
And it seems like it won't change its tune, according to you, Max Levchin. Great to have you in the studio with us. Thank you so much, CEO of Affirm, on their new product launch. Now, a developing story for you. Amazon, as we've just been talking about, has been mulling buying some of Toys R Us toy stores. Amazon isn't looking to keep the famous brand alive, but will instead use the soon-to-be vacant spaces to create Amazon-branded locations. This would follow Amazon's push into bricks-and-mortar grocery stores, bookstores, and cashier-less grocery stores. And another headline to bring you. Now, the Washington Post is reporting that President Trump is said to be preparing $60 billion in China tariffs by Friday. Senior aides had presented Trump with a $30 billion tariff package previously. We'll continue to monitor this story. This is Bloomberg. Now back to our top story on Facebook. Now, Senator Dianne Feinstein called for Senator Chuck Grassley, that's the chairman of the Senate Judiciary Committee, to hold a hearing regarding the reports that a firm that worked for Donald Trump in the 2016 U.S. presidential election improperly attained and then retained the Facebook data of more than 50 million Americans, even after Facebook asked Cambridge Analytica to delete the information. So what does this mean for the very thing that makes Facebook so attractive to investors, the trove of highly specific information it has on each of its 1.37 billion users worldwide? To answer that, let's welcome Mark Douglas. He's the CEO of Steelhouse, a cloud-based marketing company that is also an ad partner of Facebook. Mark, great to get your take on this because you're an ad partner. Are you worrying about the ways in which Facebook looks after data or not?
No, I wouldn't say I'm worried about it. I think Facebook is actually very protective of their data. They have APIs for integrating with them, application programming interfaces, and they're generally pretty strict about what you can access and what you're allowed to use.
Fascinating. So at the moment, you're not worried. You think that actually they hold quite a high bar. Interestingly, this all dates back to 2015. They've changed their own rules, but it seems as though they learned that a company, Cambridge Analytica, had been able to harvest 50 million user details only from actually an app that was all started with 270,000 users. Do you think the fact that this is backdated, that they have since changed their rules, could this have occurred at another time to this sort of significant degree?
Yeah, so I think the way from what I've gleaned about this story is the way in which this app essentially attained this information is you go into an app and you want a convenient way to register and log in. And so you see that in a lot of apps where you kind of register through a Facebook login or you log in through a Facebook login, and it'll often ask you and tells you what that information is going to be used for, usually just for the login. Occasionally you see that the app says, oh, I want to use this information to see your friends. And a really good example is the iPhone. When you get calls on your iPhone, the reason you can see pictures of your friends is because the Apple mobile app has basically gotten permission from you to go get that information. And so this is a convenience to users. It's generally disclosed to the users. And it seems like this firm basically misused that. They literally lied to the users and got around Facebook Facebook's security provisions on that. I think ultimately you can't just blame the users. Facebook plays a role in that, but it wasn't something that's like a data breach or Facebook handed them information, and the information that they do obtain is pretty limited. But that example of basically getting photos to show you with your phone calls, that's one of the prime examples of how that data is used.
So this is how the story needs to be told more freely, it would seem, maybe address those sorts of specific targets. But Mark, I want to know for you as an ad partner, are you worried that there could be a regulatory backlash here, that regulators could wade in and that we could start to change the way in which the business model really works for Facebook and therefore for you?
Well, there's certainly a lot of talk of that right now. The ad industry is actually largely self-regulated. Like what ads appear on television are largely regulated through the industry itself, agreeing to certain rules that are enforced by firms like Bloomberg, by CBS, NBC. And I think that the Facebook, Google, my company Steelhouse, and others, I think self-regulation is actually faster and probably more effective than government regulators trying to respond to rapid shifts in technology. But I do think that you're going to see a pretty big focus on even more preventing these kind of things. One thing you'll notice on Facebook, there are no porn ads, right? Yeah. And that's because Facebook prevents that. They've regulated. No one ever sees that. And so I think self-regulation works. The government is obviously very interested in the topic right now.
Mark Douglas, great to have you, CEO of Steelhouse. Wonderful to have your perspective today. Thank you. Now, coming up, Facebook's slide is costing Zuckerberg personally. How much the Facebook CEO's fortune dropped? That's next. This is Bloomberg. Now back to our top story of the day, Facebook posting its worst day of trading since 2014. Now that's as US and European officials demand answers to reports that a political advertising firm retained information on millions of the social network's users without their consent. Meanwhile, well, it might have been a bad day if you're a shareholder, but Facebook CEO Mark Zuckerberg is definitely feeling the pain too. Zuckerberg's fortune dropped by $4.9 billion Monday, currently sitting as the world's fifth richest person, falling one spot down from the earlier in the day. This is a widely read story. Let's bring in Bloomberg's Tom Metcalf, who covers billionaires, working for us now. And Tom, what really... We saw a significant drop-off here, but how has this played out? Because was he the biggest loser? Of course, he must have been around the rest of the tech community.
Yeah, and by quite a big distance. He was about 4.9 billion down today, as you say. And basically, he led the fallers. I think Jeff Bezos was the second biggest decliner, falling about 2 billion. And much of that was actually led by kind of the sentiment that the story around Facebook brought. Most tech stocks were down. So you had Bezos, Zuckerberg, and then also the Google founders down a couple of billion each as well.
Only $71.5 billion left to go, it would seem. So clearly, still got a fair amount of whack for him left to go for Mark Zuckerberg. But what about going forward? What does this mean for him? Because he's got a big philanthropic effort as well. What do you think it means in the mind of the billionaire that he is?
Well, I think that's right. That's probably going to be his main concern. He's out there saying, hey, 99% of my fortune is going to go to charity. And so, when Facebook underperforms, you're sort of looking ahead at, say, less money going to his foundation and sort of the initiatives behind there. So, big drop, but as you say, he's got 71 billion, so he's got a bit of a wiggle room.
But he's therefore out of the top 4, so now number 5.
Exactly.
Bloomberg's Tom Metcalf. Great analysis from you. Great to keep a stack of all these numbers, the billions that can make the mind boggle. Thank you very much indeed. And of course, that does it for this edition of Bloomberg Technology. We'll have more of the fallout from the Facebook data story on Tuesday's show. Damian Collins, he's a Conservative lawmaker here in Britain. He's calling on Mark Zuckerberg to answer questions before lawmakers. He'll be joining us. And a reminder that we are live streaming on Twitter. Check us out as @Technology weekdays, 5 p.m. New York, 2 p.m. San Francisco, 9 p.m. right here in London. That's all for now. This is Bloomberg. I'm Caroline Hyde in London with a look at the top tech headlines. Now, Facebook turning in its worst performance since 2014 with more than $34 billion wiped out from Facebook's market cap. That was in Monday's session. This after the social networking giant faces new pressure from the US and European officials demanding answers to reports that a political advertising firm retained information of up to 50 million users without their consent. A self-driving car from Uber has killed a pedestrian in what may be the first death due to an autonomous vehicle. A woman was crossing the road in Tempe, Arizona, Sunday evening when the car in autonomous mode struck her. She died from her injuries at the hospital. Uber has since suspended all of its driverless car testing in Pittsburgh, in San Francisco, Toronto, and the greater Phoenix area. And Apple is getting ready to make its own screens for its devices. Bloomberg has learned that the tech giant is making a significant investment in the development of next-generation micro-LED screens. Now, the new screens use different light-emitting compounds than the current OLED displays and are harder to produce, but should make future gadgets slimmer, brighter and less power-hungry. And those were the top tech headlines. I'm Caroline Hyde in London, and this is Bloomberg.